Welcome to the April 24th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, this video replaces the written commentary portion of our nightly report. Hopefully this video serves as a nice change of pace from the usual report, as well as offers some insight as to how we set up our charts what time frames and indicators we use. First up is the Nasdaq Composite. We view Thursday's action as a distribution day because it's a clear day of stalling where the Nasdaq attempted to push higher and then gave back a significant gain. So it closed about 1.6% off the highs of the session and in the bottom 20% of the day's range on a pickup in volume. So I think this is a sign of stalling or churning at the highs. And if we take a look at the price action over the past 5 days, we have a bearish hangman here on 417. Then we have a close at the lows of the day the next day. And then we have the gap down. Then we had a light volume bounce and then more stalling on Thursday in the neighborhood where the Nasdaq struggled last week. So 1, 2, 3 days of stalling here at the highs and a one-day shakeout. So what this means in the short term, we could see the Nasdaq continue to chop around at the very least and potentially pull back to the low of 421. If there is a pullback, we'll have to see how the price reacts around the 50 and rising 20-day moving average. This could be the Nasdaq digesting recent gains and just chopping around for a week or two here, which would be fine, given how explosive the move was off the lows. However, what we don't want to see over the next week or two is something that looks like this, where, say, the Nasdaq breaks the uptrend line and then breaks below the 20-day moving average, sells off, then bounces into the 8,200 level here, the 20 EMA, but stalls, and then continues to set lower highs and lower lows, as that would likely increase the odds of a retest at least down to the 7,300 area or lower. Again, this is just a guide and not a prediction, as we know that anything can happen in trading. Onto the S&P 500, which is noticeably weaker than the Nasdaq Composite. If we go back to the Nasdaq, we have the price action holding above the 50-day MA and the 200-day MA. On the S&P 500, it's yet to reclaim the 50 MA, and the 50 MA is still below the 200-day MA. So the moving average situation is much weaker in the S&P 500, though it's still trading above the 20-day EMA. It recently just broke its uptrend line. So if today's high holds and it breaks this prior swing low, we would have the first lower high and lower low printing. So a first sign of a potential reversal. But we also can't get too caught up in the S&P 500 because most of the growth type stocks we are trading are on the Nasdaq, which is holding up much better. And the S&P 500 is also being weighed down by all the issues in the energy sector right now. ZM, which was just purchased on Thursday at above 155, ran 12% higher, so it looks pretty good. And that's a move to new highs here. All-time new highs if you look on the weekly chart to the right. Amazon, which we purchased on Wednesday, still closed above the prior day's high, but just below this downtrend line. If it can break above the downtrend line and the 2430 area tomorrow, it could move higher. We have Netflix, which we purchased on Wednesday as well. Tried to move higher but stalled. Still could be in play, but would have to now get above Thursday's high and then break this downtrend line. And Docu, which we entered over this downtrend line, which closed just below our entry point, We'll see if it can take out Thursday's high within the next few days. And the worst performer of the group was Net Cloudflare, which after reversing off the 20-day EMA here, not a powerful reversal, still closed well below the midpoint. It closed about 3.5% lower, though on decreasing volume. We now have stops in place beneath the low of 421 and the low of 415. And I just wanted to point out that we're still long DXCM from around 285 here, so we're up about 12%. And if it can punch through Thursday's high, it would complete this bull flag like pattern here. So as we mentioned earlier, the odds for the market just chopping around to moving slightly lower have increased after Thursday stalling. So our current list of longs should act as a pretty good barometer over the next few days. If stocks like Netflix and Amazon break down below the 10-day MA, then this market may need to pull back a little bit more than we originally thought and possibly break down below the 20-day EMA. As for longs to keep an eye on, Tesla, which is in a tight range above the rising 10-day MA, if it can clear this 2-day high, look for the price action to potentially rally up to the prior highs. Chewy has formed a bull flag-like pattern here above the rising 10-day MA. A move through the 46.30 area could spark the next wave up. RNG has stalled at the highs here. Might need a little bit more time, but we look for the price action to hold above the 50-day MA. SDGR potentially in play over this 49 area. NetEase, if it can get through the 3-day high around 353, could be in play. And then Coop looks to be forming a handle here after a 40% pullback. Here's the handle that's forming. If the price can get above this 163 area, look for the stock to rally to the prior swing high and then take that out on a pickup in volume. SE is also still pretty tight here at the highs. A move through the 2-day high could spark the next wave up. A pullback into the 10-day MA that holds with some sort of reversal candle could also serve as a buy entry on weakness. Nvidia forming a cup with handle-like pattern here. Here's the handle portion. As long as the price holds around this area, it should be in good shape. And eventually, say it breaks this downtrend line, one could add over the downtrend line and then buy on a breakout above the handle high. IPHI has ripped off the lows, about a 75% move off the lows, and has yet to touch the 10-day MA. While this stock is a bit too extended to be actionable right now, this is one we'd monitor for a 10 to 12% pullback to the rising 20-day EMA. So just a quick recap, based on Thursday's stalling action, the odds for the market to pull back in have increased. The Nasdaq may be settling into a trading range or possibly starting to reverse its short-term uptrend. As mentioned earlier, this is just a guide and not a prediction, as we know that anything can happen in the market. Thanks for watching. Have a great weekend, and we'll see you back here next Friday.